Hi there. I got a new investment idea from a subscriber, which is Hudson Technologies. As you can see, this company, if you look at this performance, the stock price went up over 1000% in the last 5 years. And the market cap, if you believe, is still 400 million. And most importantly, the PE ratio is about 9.2. So when you see this performance, you might wonder, is still a great buy at the current price, Hudson Technologies? Well, if you look at their balance sheet, you can see that they have some assets, total assets almost 300 million, and the market cap is 400 million, so that's great. If you look at their debt, they have no debt, total liabilities are about 55 million, so again, a great point for this company. Then you look at the revenue, you see that the first quarter they made over 65 million in revenue. And what's the most important thing is that they succeeded to make a profit, close to 10 million, 9.5 million. And that's great. 10 million per quarter, this means 40 million a year. And that's why the price to earnings is about 9.2, as the market cap is about 400 million. As I said, you have to ask the question if this company is still a great investment at the current level. And the answer, as you probably know, is not easy. Everything depends on their future customers. And also, you have to understand why the stock price went up so much. An increase over 1000%, quite even more, 2000%. It depends on the price you pay. So, you have to understand why the stock price went from $1 to over $8. And for that, you have to read the reports. Read about the history of this company. You can also look at the results, their financial results. And you can see that the revenue from 2020, when the revenue was about 148 million, to 2023, it has almost doubled, close to 300 million. And you can also see the increase in the net income from a loss of 5 million to a profit over 52 million. And that's why the stock price went up so much. A return over 1000%. And you have to understand why the revenue and earnings went up so much. Why that happened. And if you read, as I said, if you read the reports, you'll find out that they have an important customer. As you can see here, the company sells industrial gases to a variety of industry customers, predominantly to users in or involved with the US military. Be aware of this customer, US military. In 2016, the company was awarded as prime contractor, a 5-year fixed price contract. So a 5-year fixed price contract, including a 5-year renewal option, which has been exercised. So let's examine the facts. In 2016, they were awarded with a prime contract, a 5-year fixed price contract. This means from 2016 to 2021, 5 years, they had a fixed contract with the US military. And if you look at the revenue from 2016 was about 100 million to 2021, 193 million. Right? The revenue almost doubled. And then, as the duration of the contract was about 5 years, as you can see here, including a 5-year renewal option, which has been exercised. So in 2021, they renewed their contract. That means that their fixed price contract has been changed to a higher price, of course, as there is inflation. And then, from 2021, the revenue went up to 325 million because of that renewal, a new contract with a new price, which was higher. And that's why they succeeded to increase their net income and also the revenue. As you can see, net income was 42 million and then 104 million. So you can easily see that the increase in the revenue and net income from a loss to a profit happened due to that contract, the renewal option, which has been exercised. And that's why the stock price went up so much from 2021, from almost $2 or $1 to over or close to $9. And you have to understand this, because if you don't understand this important fact, you won't be able to take advantage of the stock price. When is the right time to buy and when is the right time to sell? Still, the market cap, as you can see, is 400 million. Can go to 4 billion, another 10x. If this company, Hudson Technologies, gains more contracts with other institutions or other major companies. Now, for the last quarter results, Q1, you can see that Q1 2024, you can see that the revenue has declined compared to 2023 from 77 million to 65 million. And also their net income from 15 million to 9.5 million. And that's why the stock price went down. A decline over or almost 40%. When you understand this, that the stock price moves according to the net income of this company and the revenue, then it's much easier to predict what will happen in the future. Right? It's quite easy. So you have to understand why the revenue has declined. Did they lost a customer? Did they had lower prices? Let's see. Let's examine the facts. If you read the reports, as I said, you have to read a lot, over 200 pages, to find out those important facts, which are quite tiny, but very important. And of course, you have to put the pieces together to understand the story. Because if you don't understand the story, what happened and why, then you don't know what to do and what will happen to the stock price in the future. It's easy, right? So let's examine the facts. Revenue for the last 3-month period ended March 31st, 2024, were 65 million. A decrease of 15% from 77 million during the comparable 2023 period. This means last year, 2023, first quarter. And as you can see here, the decrease was attributable to lower selling prices of certain refrigerants sold. This means that they have lower prices for their products. By the way, as you probably know, this company is selling refrigerants and offer other services. They also recycle those refrigerants and sell them to other customers. They have a plant, they clean their refrigerants, and then they resell it. It's quite easy, their business. But what matters is the future. If this company can gain more contracts, if they can increase their prices, then also the revenue and their earnings will increase more in the future. So now, if you are planning to invest in this company, be aware that everything depends on their future contracts. If they can sign new contracts with different customers in the US, because this company is from the US and sells its product in North America, the US, you have to predict if this business can attract more customers. And of course, increase their prices. Their selling prices for their refrigerants, products and services. If they can do that, those two things, increase prices and sign new contracts, then the stock price can rebound and grow even more in the future. The market cap can easily go to 1 billion or even more than that. So for that, you have to predict the future, and it's quite hard. You don't know if this company is able to attract new customers. For the moment, they're working with the US military, with the government. And the revenue, you can expect that it will be stable. about, as you've seen their past performance, to be about 300 million and also to make a profit. Of course, if they can only manage their profits well, if the management is not capable of maintaining this profitability, then you have to be aware of this risk. If you look at the past, you can see that in 2020 they had no profits. Same for 2019, same for 2018, only in 2017 and 2016 when they signed that contract with the government, US military. But in the past, they had few profits out of losses. So again, you might see for the next 2 or 3 years some profits and then another decline in their profits. But as I said, everything depends on their future contracts, if they can attract more clients. The debt is not a problem. As you can see, it has been reduced. They had quite a lot of debt in the past, but then they managed to get rid of that debt, and now they have no debt according to their last quarter results, as you can see here. No debt. And their cash is more than 10 million. So the performance of this company was great for the last 5 years, but in the next 5 years, you have to ask yourself if they can increase the prices and attract more customers. If they can do that, then the stock price can double from the current level, quite even more. If not, then you know the answer. The stock price may stay flat for a longer period, or it may go down even more. So that's it for this video, and if you have other questions about this company, then let me know in the comments.